Markets sliding and tariffs looming as we speak. Jerry Gidel is going to talk about all of these issues in his weekly commentary right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. What a week, Jerry. We started with the markets going up, and now they ended on Friday going down for all three major commodities, the agricultural commodities. And as we speak, there are a lot of things that are not decided related to the tariffs.
Exactly. Lots of confusion about what happened, what could happen tomorrow. It's officially all going to happen on February 1st. And then how soon does it actually get implemented? How fast it happens? There's lots of confusions there. Earlier in the week, it was really, the administration was kind of peddling things. They talked about Mexico and Canada and their 25% scenarios and that. But really, we're pretty mum about the Chinese involvement in this tariff approach here and that. And even Trump in midweek was talking about, well, we haven't just really totally got our head together on the 10% idea he's throwing out there about China. And at the same time, we had weather situations in South America that really weren't not following through with some of the rain activity that was projected late last week. And so we had a pretty firm market up through midweek here. And that actually pushed up corn up just under $5 and beans had a nice little pop there. Despite the weekly exports shipments were solid, but on things, nothing totally spectacular, but they're definitely above the required amounts that we had on shipments. Now, on Thursday, though, we did end up seeing the soybean export sales slip down to around 15.5 million, and that corn was still above 50. But and so the beans started to get weakened up in here, and also the fact that the world was starting to look at what could happen with the soybean or with the tariff situations and that. And that, interestingly enough, the tariff impacts on soybeans or on China would most likely be centered on soybeans, while Mexico is probably dealing with their current corn purchases from us, and then Canada has been a pretty good seller of some spring wheat and ingredients in that world. Oats is another big one that they sell to the U.S. So kind of mixed bag as to who had the impact in each of these markets going ahead. But ultimately, the markets started to look at the actual announcements, and we also had a late scenario here of from Bloomberg talking about the whole scenario starting on February 1st and versus Reuters had the same concept as I don't think that the Bloomberg scenario uh, was giving the idea about this whole issue of getting the things organized to actually accomplish the tariffs and get that done, which is still likely not to really get going until after March 1. And maybe there's a time in the next month that things could calm down and nothing gets uh, having the tariffs happen. But that's been the excitement of this week, no doubt about it.
And the Mexican president has been threatening this Friday the American officials that she would target the U.S. agricultural products as a retaliatory measure.
Yes, yes. And the same thing from the Mr. Trudeau in Canada. Actually, he had like $108 billion particular program he announced even a couple weeks ago from there. It unfortunately these kind of scenarios No one ever totally wins, and that's actually surprisingly was why this whole situation between Canada and Mexico and eliminating tariffs and all kind of stuff. It turned out that, okay, the Mexicans bought corn from us, but then uh, at the same time, we got some of the beef, and up in Canada, we got some of the pigs from them, which was interesting. That I forgot about that scenario, and it came out this afternoon. There could be some tariffs on buying piglets from Canada, and then uh, turning around to give us more pork in the U.S. So definitely lots of different implications on this thing, back and forth, to say the least.
Now, I want to hear from you. What do you expect in terms of corn? I think corn will have more variation in the price, more volatility than soybeans because there is a delay on the Brazilian planting. And if that retaliatory measure takes place, then Mexicans would buy less corn than they used to do.
Yes, there's a connection there, but right now the Mexicans have bought a huge amount of corn. They shipped a lot of corn to them also, by the way. That's the thing that's going to be interesting here. If these tariffs are going to be on new purchases, which is going to be somewhat limited on U.S. purchases this year, and then you're exactly right. If there's issues in Brazil about their rain event, which is uh, right now, I think I heard some updated information midweek that we're instead of being 2 or 3%, it was maybe 5 or 7%, but that's still a 10 to maybe as much as uh, 12% behind, and maybe even further than that. I'll take that back. That was compared to last year, and last year was also a year when it was late. Normally, they're 20-25% done on Brazilian bean harvest. Now, why is that excited about corn? Well, the fact that the second crop corn in Brazil doesn't get planted unless the beans get off the ground, get into the combine and gone. And so uh, this is real interesting. There's lots of different paths going on here at the same time, and you're exactly right. That I think that uncertainty is still out there, and I think that's part of the reason why corn was as strong as it's been over maybe the last 2 or 3 weeks has been this issue of not getting the beans off in Brazil so that the world could have access to corn sooner this spring. There's not a lot of corns coming out of Brazil now. It's pretty well shipped long ago and that kind of stuff. It's what's going about the coming year as much as it is. Right now, things remain reasonably tight. And I think that's part of the reason why we've had our exports on corn so far ahead of last year. We're like 250 million on sales or more, 300 million ahead of last year because of the issues that have occurred in last year in South America and also the cheap prices.
Well, and there is also we can't skip the issue of cancellations announced by China this week that they wouldn't pay for those shipments of Brazilian soybeans on the terms of quality that these cargoes have not had the quality that they expected. Do you think that they want is just lower prices, as one of the analysts that I interviewed this week mentioned?
No, well, it's a getting lower prices is always somebody's general desire, but I think the real key question was is that in this scenario that the quality of the stuff that they were buying and the prices they were paying, they were feeling that they should get quality product. And in some ways, I think it reflects back to what we've kind of said from last year that the excuse me, the size of the Brazilian corn and soybean crops. I think I favor more the Brazilian side of those numbers than the USDA's numbers that they've been carrying in here because of the fact that now we've got some examples that the Brazilians are trying to put together some cargoes, and they were at the bottom of the barrel, as I call it, when you get that kind of quality in there. And they've got good quality product out there, and some of the protein's better than we can produce, things like that. And so it's highly unusual that some supplies, actually some meal, actually in Argentina, they took back from the port and not even put it in the ship. So it's not just in Brazil. There's some other things in Argentina that have
Yeah,
been
then
some issues.
talking about Argentina, we had some tax relief for Argentinian farmers and traders. So, do you think that might increase by how much the supply in the market?
Uh, I think I saw that somewhere along the line that they had already shipped out a pretty substantial amount of stuff, or at least had got it sold at this point in the soybean world. And you're right, they're taking 5 to 7% down across corn, soybeans, wheat. Maybe I think it was a little less than that. Same thing in the products out there. From there, things like that are always interesting. Uh, from the standpoint that who pays it, who gets the benefit of it? Is that going to create more purchases in South America? Yes, and to some extent, maybe, but I'd have to say that right now, I think it's logistics, uh, timing of that, and that's another interesting twist on here. There was questions made to China here in the world trade since things have been delayed in getting the soybean harvest. Are they going to be potentially looking at other places to buy some supplies in the short term? They seem to be calm, cool, and collected, and did not make any suggestions that might happen. But I guess that all depends on where we're at here in a couple weeks. I think last year they started to pick up some stuff in the U.S. And that when things weren't progressing as well as they'd hoped to in Brazil. So things like that are kind of the short-term question for now, but it might change.
Yes. So, what do you expect for next week?
Well, I think the next week is going to be somewhat of a little bit of up and down and sideways. I guess in general, though, until we get a better handle, and I kind of feel like that is involving when the taxes are and the whole scenario potentially is going to happen on the actual tariffs. At this point, I don't think. The more we get done by the time we get to March 1, the more stuff will have less taxes on it, if that makes any sense from there. But the one thing that we do have, and this rally we had on spot nearby corn up to $5, it definitely was a factor. And part of the reason why we backed off, actually, we had the biggest slippage on beans on Thursday. And then beans actually yesterday were generally a little higher before that late session announcement about the soybeans being included with the Chinese 10%, and that they were actually slightly higher because of that. But in general here, the corn is probably the most vulnerable, and that it was just what, 2 or 3 cents under $5 on March, and now I think it closed out here, and I can just see it myself if I get my screen going. Here we go. Yeah, it was down 8 cents today, and it was off 5 or 6 cents yesterday from there. So it took the biggest bite in this thing on the corn because of the fact that we were at record long open interest from the investing community. And so there's some vulnerability in this thing until we get more knowledge of what's going on nearby. So our recommendations to be a seller last week on rallies were good. And hopefully here we'll get some stability in some of these products going forward.
All right. We'll check back next week. We'll have plenty of things to talk about.
Oh,
Thank you,
no doubt.
Jerry.
You bet. One last thing we want to make sure people are aware of: the trade's looking for a 217 million crushing statistic on Monday. That'll be a new record here. I was looking for 216. So that's just for December, by the way, not January. So things can definitely slip a little bit in that U.S. crush because of the announcement this week from President Trump. But overall, as we go forward here, the U.S. Markets are going to be both international and out of Washington. So keep your ear to the ground.
Yep.